One of the hard parts about being a dividend focused YouTuber is trying to appeal to the many different kinds of dividend investors out there. Well, in my attempt to do just that, welcome back to my Power 5 Stocks of the Week. Here I present you with the leaders each week in the following categories: dividend yield, dividend streak, dividend growth rates, 10-year returns, and the percentage off of the 52-week high. The only requirement I have for consideration to be on this list is that you have to beat the S&P 500 and you have to have a dividend streak of at least 5 years. These metrics just help me weed out all the crap and give you guys the best stocks I can each and every week. But with that out of the way, let's jump right into this week's list. The leader this week for the best dividend yield is Arbor Realty Trust, stock ticker ABR. ABR is a quarterly payer in the financial sector that's paying $1.60 per share per year and has a forward dividend yield of 10.3%. ABR has been paying and growing their dividend for the last 9 years. They have a 3-year dividend growth rate of 10.55%, a 5-year dividend growth rate of 16.43%, and a payout ratio of 81.91%. ABR has an ex-dividend date of March 2nd and a payout date of March 17th. And a $10,000 investment in ABR 10 years ago while only reinvesting the dividends since then would have turned into $47,536.85, which is a 16.87% year-over-year return rate. And here we compare that to the S&P 500 that turned into $32,014.31, which is a difference of $15,522.54 over just the last 10 years. The leader this week for the longest dividend streak is Dover, stock ticker DOV. Dover is a quarterly payer in the industrial sector, paying $2.02 per share per year with a forward dividend yield of 1.3%. Dover has been paying and growing their dividend over the last 66 years. They have a 3-year dividend growth rate of 1.19%, a 5-year dividend growth rate of 2.01%, and a payout ratio of just 20.61%. Dover has an ex-dividend date of February 27th and a payout date of March 15th. And a $10,000 investment in Dover 10 years ago while only reinvesting dividends since then would have turned into $38,629.30, which is a 14.47% year-over-year return rate. And again, that's compared to the S&P that turned into that $32,014.31, which is a difference of $6,614.99 over just the last 10 years. The stock with the best dividend growth rates this week is Old Dominion Freight Line, stock ticker ODFL. Old Dominion is a quarterly payer in the industrial sector, paying $1.60 per share per year with a forward dividend yield of 0.45%. Old Dominion has been paying and growing that dividend over the last 5 years. They have a 3-year dividend growth rate of 38.33%, a 5-year dividend growth rate of 35.1%, and a payout ratio of just 9.85%. ODFL has an ex-dividend date of February 28th and a payout date of March 15th. And a single $10,000 investment in Old Dominion 10 years ago while only reinvesting dividends since then would have turned into $151,010.56, which is a 31.19% year-over-year return rate. And again, that's compared to the S&P 500 that turned into $32,014.31, which is a difference of $118,996.25 on just 10K just 10 years ago. Now, if you just noticed, the last stock would have turned $10,000 into more than $151,000 in just the last 10 years, but that's still not the best stock over the past 10 years. Before we get to that stock and the stock that's trading the highest percentage off of their 52-week high, please be sure to leave a like on the video as it helps other people find the video. Subscribe and ring the bell for new dividend related content every single Monday and Friday. And let me know in the comments down below which of these categories is your favorite. And if I don't cover your favorite category, let me know what that is in the comments down below and why. But now let's get to those final 2 stocks. The stock that's leading the pack this week in 10-year returns is Kinsale Capital Group, stock ticker KNSL. Kinsale is a quarterly payer in the financial sector that's paying 56 cents per share per year with a forward dividend yield of just 0.17%. Kinsale's been paying and growing their dividend over the last 6 years. They have a 3-year dividend growth rate of 17.57%, a 5-year dividend growth rate of 16.73%, and a payout ratio of just 5.09%. Kinsale has an ex-dividend date of February 27th and a payout date of March 13th. So Kinsale only has about 6.5 years worth of history to go back on, but had you invested $10,000 in Kinsale that 6.5 years ago and only reinvested the dividends since then, that would have turned into $186,372.63, which is a 56.29% year over year over year return rate. And we compare that to the S&P 500 that in the same 6.5 years would have turned into $21,083.15, which is a $165,289.49 difference in just 6.5 years. And the stock this week that's trading the highest percentage off of their 52-week high is Cognex, stock ticker CGNX. Cognex is a quarterly payer in the technology sector that's paying out 28 cents per share per year with a forward dividend yield of 0.58%. Cognex has been paying and growing their dividend over the last 6 years. They have a 3-year dividend growth rate of 8.94%, a 5-year dividend growth rate of 9.61%, and a payout ratio of 18.08%. At the time of recording, Cognex was trading 40.05% off of their 52-week high. CGNX has an ex-dividend date of March 2nd and a payout date of March 17th. And a single $10,000 investment in CGNX 10 years ago while only reinvesting dividends since then would have turned into $48,729.69, which is a 17.16% year-over-year return rate, and we compare that to the S&P 500 that turned into $32,014.31, which is a difference of $16,715.38 in just the last 10 years. As mentioned in the beginning of the video, all the stocks in today's video have not only beat the market over the past 10 years, but all of these stocks have a dividend streak of at least 5 years. Use the comment section down below to let me know if you own any of these stocks and how they're doing for you. And if you ever thought about getting paid weekly from your dividend portfolio, I made 2 portfolios that do just that, all while beating the market. The one on the left side of your screen is going to be focused more on dividend growth rate, while the one on the right side of your screen is focused more on dividend yield. But until next time,